Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day. Trading today, market is up 1% on the S&P. Looks like Nasdaq is up 1.5%. Semiconductors up about 1.3. Dow's up about 1. Russell 2000. The small caps up about a 0.5% there. Banks flat. Energy's down about a 1% there. Transport's up a little bit. Biotech's up about 1.3%. Emerging market is up about 1%. Looks like throughout the day, we've been last week or two, we've been seeing some discrepancies. Like we saw, there's some days where S&P and the Nasdaq will be up and everything else will be green. And then there are some days where Nasdaq and S&P and semiconductor, they'll be down, negative, red, and everything else will be green. It was a mixture of things, right? And we talked about how the sector rotation continues to occur, balancing itself, propping itself up. Today, I think it's been a while since it felt like a real good, strong bullish day. Because I look at the stocks that is making a move today. And it felt like across the board, majority of stocks and sectors were green today, except the fact that energy is down. Except energy, everything else is pretty much green today. Banks are, flat, but everything else is green today. It feels like a deep green day today. Bitcoin, grayscale Bitcoin is up 2% there. Gold and silver is finding some traction there in the last couple of days and last couple of weeks or so, see if that can last. We got the oil up a little bit, dollars flat, treasury bond is up about 2% there, and VIX is down a little bit. Let's stick with the S&P 65-minute chart here on Spider. So this is where we closed yesterday. We just analyzed this yesterday. We saw that decline. We got down to right on that short-term moving average. And we've been talking about how we want to continue to give benefit of the doubt to the buyers as long as we stay above the short-term moving average. And I've been saying that since this is back in late March here. You can see right there that short-term moving average was lost, and then it started to decline to the downside, and the short-term moving average acting as a resistance. This is 25 EMA on 65-minute chart, exponential moving average, and it was acting as a resistance here. This is a late March, and then what happened was once it flipped, and with the gap up, I might add, and I think that's a nice gap up to kind of support that move. We can also draw that resistance there, right? That's a falling resistance coinciding with the gap area and my short-term moving average no longer acting as a resistance right there, right? And we wanted to continue to give benefit of the doubt to the buyers in the short term, and it's been entire month of April we've seen that rally. And sure enough, we did see that pullback yesterday. It is no coincidence that it came down to that short-term moving average. Out of all places, right? Out of all places, decided it was going to just pause there, just slow down, just stand right there with that doji candle. And obviously with that gap up, and looks like that's that low. And looking at things in the short-term perspective, we need to continue to give benefit of the doubt to the buyers as this market is continuing to cultivate higher lows and higher highs there. And this entire move is started with that bullish divergence we talked about, right? That's the lower low there in price action, higher low on the oscillator, right? And you can see ever since then, what does the oscillator do? It oscillates back and forth on top of its band. And that's a good sign because bears are not able to bring this all the way back down. And I tweeted this out earlier today. I haven't checked what the oscillator looks like. We'll look at it on this video. This was, I think, earlier today, midday. See what it looks, so what this oscillator looks like towards the end of the day today. So let's get back to my chart right here. So, and that was the first hour. We thrusted above it, right? Second hour, we held. Third hour, continue to march higher. Fourth hour, we held. And then we continue to march higher on the fifth hour. And we are trading on Spider at 415.83. This market is cultivating and printing, establishing new all-time highs almost every single day. And it's interesting because it doesn't seem like a lot of people are excited about this kind of move, and because market always fools the majority, and I assume the majority are not being part of this move or trying to desperately predict the top and not doing so well in the month of April, really in the entire year since COVID lows back in early April of 2020 or late March of 2020. It's been an extremely difficult market for any short sellers to survive. And this market really, you know what I mean? This market didn't give us any kind of evidence that, you know, this market isn't slowing down. I mean, if we look at, here's a daily chart I tweeted out on my Twitter account, and that's the S&P 500 daily chart, and that's a COVID decline right here. And you can see how this market continued to cultivate and establish those higher lows and higher highs. And I've been tracking this market every single day with you guys since the March lows, because I started this daily videos in March lows, in April, in early April, right? Purely just because I was bored. I used to do these market analysis videos only on a weekly basis prior to it. They locked us down. I had nothing to do, so I thought I'll do these videos on a daily basis. And ever since then, we've been analyzing and tracking this market with gaps, moving averages, high lows and higher highs, short term, mid term, long term. And this market not once gave us any kind of evidence that we should be bearish and you should never be calling top. And it's extremely difficult market. And I think, you know, something I say a lot is this market always fools the majority, therefore the majority follow the fools. And you know, it's interesting how extremely the speed of this market, the rate of how this market moved. This is a NASDAQ. This is like a weekly chart there. I actually shared this on the last night. I think last night or a few days ago on my Twitter account. But as you can see that the rate of which this market has moved, right, since the COVID lows is an incredible strength and incredible speed. And I want you to think about how it all came about. This raising bull rally was born in the worst economic environment ever. The worst ever. This was when COVID was ramping everywhere. People are calling for that Great Depression. They're locking us down. There's no more economy anymore. Stocks like bank stocks, airline stocks, restaurant stocks crashing down 80% or more, right? People are saying things like this market will never ever recover in 2 decades. And you think at some point it must slow down. At some point it can't go on any longer. At some point it must do something. Then let me tell you what, this market doesn't really have to do anything. Nothing is due for anything. Not this market should do not. Laws of physics do not apply here, right? And just look at how this and as I present this to you guys, which I've been presenting to you guys all these months and weeks, you're continuing to tell yourself that, well, the higher it goes, the faster, the bigger the crash is gonna be. You know, I've been trading this market seriously since 2012 or so. All the stuff that you hear about now, I heard it all back in 2013, 14, and 15. 15, 16, there's supposed to be a global market meltdown. You know what I mean? I've heard it all, and people always come back and say the same thing. And usually people say those things because it is extremely difficult see this market moving like this and not able to ride this rally, not giving the benefit of the doubt, not understanding the primary and intermediate term uptrend, you know, freaking out on every time there's a little bit of volatility. And this is why, you know, the long-term investing and position trading is not for everybody. Anybody can put a couple trades here and there, day trade, short-term trade, swing trade, scalp, overnight, whatever, right? The real traders and investors can't be someone who's going to be easily, faked out or freak out or lose their cool just because there are certain shenanigans that occurs in the market. And obviously this market, the way it behaves is totally normal behavior. This market is not going to go straight up. And who would ever thought the market will be up here after a couple years later, right? And so it's interesting to me that even just the way, just when I roam around the Twitter sphere and social media, how much, I mean, this entire move we've seen, right? How much of a negative news, articles, videos, tweets, and chatters, and all of that's been shared and gets the most engagements and most attention versus any kind of a bullish thesis, right? That's why if there's a popular idea, you want to be away from it. You want to be away from the popular idea, because market always fools the majority, and you do not want to follow the fools. So you can see it's been grinding higher, right? Looks like this gap is going to provide a pretty nice cushion now. And let me zoom out here, and we can see there are lots of gaps here. And this is one of the things I used to hear so much, that all gaps get filled. Well, say that to that gap in February 1st. That gap never got filled. And that gap that didn't get filled, guess what? That actually acted as support. Well, guess what? We have that gap right here, March 8th. That gap never got filled. Not only that gap never got filled, when it came back down to retest, that level acted as support, and strong support at that. This gap right here, this gap never got filled. Right, this gap. I mean, I can go back down all to the 220 and give you guys gaps that were never filled. People just say things, these cliches they remember from other people saying on Twitter that all gaps must be filled, and they say things, they believe in it. All these popular ideas are not gonna help you, right? All these crash scenarios, which been this entire time. It's been that popular idea, right? All these iconic, when I say iconic, I mean quote unquote iconic, public individuals, well-known public figures, been calling for a crash for years. I'm not going to name names, but there are many individuals been calling for a crash since 2012. 2012. Do you know where 2012 was on S&P? This right here. We're talking 100. We're talking 100 on Spider, 1,000 and SPX. We're trading at 415. 2012, people been calling for a crash. Some people still waiting for that. And yet, people continue to listen to these people. That baffles me. How that works, I don't know. But so if we do see any kind of pullback, 413 should be perceived as a support. We got the micro-term pivot right here, prior resistance. That's a micro-term current pivot acting as potentially a new support there. My short-term moving average is now residing at 412, right? 412. And let me tell you something. Like I didn't know we're gonna see a bounce, right? This is why I use language like benefit of the doubt goes to the buyers. Like no one saw it that, oh my God, that short-term moving average, yeah, we're gonna find support there. You didn't see it, I didn't see it, none of us saw it. But that's the point. None of us can predict this market. How many of you guys every single day, tomorrow's gonna be down day, tomorrow's gonna be up day, tomorrow's down day, every single day. If you put all of that bets in a track record, I bet you'd be wrong 90% of time. Right? I didn't know we were going to bounce there. I didn't say last night on my last night's analysis that that's where we're going to see a bounce. I said, well, I want to give benefit of the doubt on this short-term moving average because we do have some impressive resume on this guy. And that's probably a higher probability type of scenario. We could have done all kinds of stuff today. We could have gapped down. We could have seen a down day. Anything. See, when it comes to short term, next day, nobody can predict how it's going to go. That's why it's imperative we understand the big picture. Let's check out that oscillator here. So it looks like oscillator did make a move to the upside there. We curl back up. You can see when we scrutinize in this oscillator, we're not coming back down to the bottom of its band. Rather, we're oscillating back and forth now at the top of its band. And that's when you see a strength in a rally, right? We talked about this before that when my oscillator hit that extreme overbought, that's the first time since November. We're talking 6-7 months. We never hit extreme overbought, right? That's telling us there was a strength in it, and that was that first signal. You can see it was very adamant, and ever since then, market has been in this raising bull rally mode, right? And this is how the buyers operate. They push inch by inch. We will have a little corrections in between. I do not know where the top is. You do not know where the top is. Many of people trying to predict the top already got burned. So that is a futile attempt to trying to call top. We want to continue to assume that this market could grind higher like this. And you can see on my oscillator, there's still room there, right? There's still room to be made. It's not overbought yet. There's still some room there. There's another one more day worth of energy that bulls actually gained from this little pullback there. So you can see creating some energy there by doing this and just gapped right up there. So we're going to continue to give benefit of the doubt to the buyers. Short-term moving average is going to be guide. It's going to be a guide for us in the short to micro term. And with this gap up, we got another cushion if there's some sort of shenanigan downside. We'll see how the market plays out. We got another day of trading for this week. I'll come back for you. Enjoy your evening and good luck trading tomorrow.